So now another thing I want to talk about is where are we looking to buy these stocks at these new highs? And of course, we're not looking to buy the general market near new highs. Okay, although that could happen. It could happen where stocks are starting to emerge into new high ground and they're meeting our criteria and the market is going into new highs. But generally speaking, and looking back in history, 96% of big winning stocks and fast moving stocks, they start their move from a correction, from either a correction in the market or a bear market, or a large correction, a large bear market. And what we found is that you've got basically there's three really great opportunities to look for these leading stocks and look for stocks to be making these new highs. And sometimes they actually happen even before the market makes its low. So you'll get the general market is moving down, and sometimes it goes down in a couple waves. And even before you get the last wave down, you'll have some stocks start to break out of bases. And this is what we call a predictive move. So you'll have back in the 1990s, 1990, we bottomed in October of 90. And prior to that, there were stocks like U.S. Surgical and Amgen and a bunch of medical stocks. And I'll show you a few examples later on. American Power Conversion, Ballard Medical Products, a whole bunch of stocks that I remember that I was in at that time. They were actually making new highs and they were holding up really well even before the market made a final low. Then you usually have a group of stocks that will start to emerge out of their bases and make new highs that we call coincident. And that's where they're coming right off the market low. Usually you'll see those stocks break out right around the time you get a follow-through day. As for those of you that don't know what a follow-through day means, that's the O'Neill follow-through day, where the market gives you a signal based on volume and accumulation in the averages that you get a good indication that you've made a bottom. That's something that you can pick up William O'Neill's book and take a look at. But a lot of times we'll see stocks break out right around that time when you get a follow-through day, which we call coincident, usually coming right off the lows in the first, sometimes 5, 10, 15 days off the lows. And then as the market starts to move higher and maybe you get a pullback or two, you'll get what we call confirming. And that's where you put in a good sized bottom and the market now is in a pretty strong uptrend. And then you get some more stocks. And these are sort of the opportune moments that you have. So when you, and what all this really means, and what I'm trying to get at here is that corrections are good. Correct. I mean, they're not good if you get stuck in them and you don't cut your losses and you're holding big declining stocks, but you should be in cash. Okay. If you use, we're going to have a bunch of sell rules. We're going to show you later on. If you're using this right sell rules and you're cutting your losses, you'll be in cash during bear markets and you'll be ready and prepared for these opportune moments. And so, when they finally show up, this is where you have a really golden opportunity, because this is where a lot of the big winners will emerge and you can get onto them very early. And Dave, I'm sure you've had your share of stocks that you bought going into new bull markets, coming off of bear markets. Maybe you could share some stories.
Yeah, what I was going to add too is when you're in that down phase, before you even get the predictive, is that the market leaders and the markets usually come down in waves, or in maybe like 3 phases, and I call it about making 3 lower lows, or the market comes down. But as the correction goes on, just like that, as the correction goes on, the strongest stocks, yes, on that first move down, they're going to get hit. On the second move down, they're not going to get a hit as hard, and they might not make new lows at that point. They're starting to resist the decline. And by the third low, those are already turning up and going. And so the market leaders, and that's what's great about a correction or a bear market, the market leaders are going to start showing themselves probably halfway to 2/3 during the correction or the bear market. And sometimes these stocks hit lows and start turning up and actually start making highs months. I've seen it where 1982, in the August 82 low, a number of stocks, a lot of retailers were making their lows and actually turning and going into new high ground 2 to 3 months before the market actually bottomed. So there's a lot of predictive action going on even before the overall market hits a low.
And a perfect example here is Walmart. So this is the 82 market bottom, and you can see, as Dave said, you came down in 1, 2, 3 waves before you made the final low. And this is Walmart. Now, keep in mind, Walmart at this time is not the Walmart that you know now. This is a small company. At this time, back in the 80s, Sam Walton, founder of Walmart, was standing on a soapbox in front of the stores, flagging people to come in, and the stock was trading, very small amount of shares. You're talking, sometimes this stock traded just several thousand shares a day. So this was a small company that was relatively small company that was growing its earnings very rapidly. And you can see here, you come out and you go into new. This is a new high right here after the first leg down. So when the market came off, this is where you're saying, wow, this market's, in bad shape here. It's selling off. But this stock was poking its head into new high ground. That should have got your attention that, hey, something's going on here. This stock is really strong in a weak market. Now the market, the index here, the Dow, comes down and makes another low, rolls over. Look what happens to Walmart. It just builds another base on top of the other base. And as soon as it starts to turn up, bang, it comes into new high ground again. So this is, you could have been buying this stock here, either here or here, and then finally you roll over again. The market makes that third wave down, and look, Walmart's already out and just having a natural pullback right now. And then when you come off of that low, wham, it's going really into new high ground. It's already made a pretty big move, and the market has just bottomed and hasn't even gotten going yet. Something I need to point out here real quick, because you're probably looking here and going, oh, Walmart was a 35-cent stock. No, all these prices, at least on many of these stocks, are adjusted for splits. So these prices were much higher, but they're adjusted for splits. So it might show that it's a 5-cent stock or a penny stock, but none of these were penny stocks. So I just want to point that out. Let's take a look also at another one. So Apple Computer. So here's another one. We go into a correction. This wasn't a big bear market, but 2004, we had a correction in the market. And again, 1, 2, 3 waves down, right? Right off of that first wave down, as you start to turn up just from that initial pullback, you see right here, Apple formed a nice big base into new high ground. Now, again, you form this little base and you get a nice follow-up little buy point as you come down again and as you start turning up from that low. And by the time you have that third leg down and you finally make a low, you're on the third opportunity to buy Apple from a base. You've got 3 buys now. And from that point, stock went up over 125% just in 6 months. Let's take a look at Amazon, of course, because everybody knows this one, right? Now, this is sort of what happens with most leaders. You're going to see that virtually every stock market leader in a cycle, when you have a bear market, the leading stocks are going to bottom ahead of the market. And this is why corrections are great, because you get to really see what stands out, and you get a pretty good lead time. So you really get to prepare for the next wave of the best stocks, because they're going to make their lows. Here you see Amazon makes a low here, and then it turns up, and it's not into stage 2 uptrend. Remember, we talked about the 4 stages, right? We don't want to buy a stock unless it's in stage 2 uptrend. Well, we're now in a stage 2 uptrend right here. And this is where the stock has that consolidation. Remember, we talked about it. We want to look for the consolidation within the stage 2 uptrend. So this is your first consolidation after you're in a stage 2 uptrend. If you can see here, stock bottoms here, market doesn't bottom all the way till here. And Amazon is moving out of that consolidation in what manner? Remember, we said predictive, coincident, and confirming. This is right off the lows. That's coincident, right? So that's coming out coincident with the market low. And now that breaks out. And by the time the market actually gets into an uptrend itself, into a stage 2 uptrend, stock's long gone. Stock has already moved from 20 to over 40. It's already doubled. And this stock went up 240% in just a year. These are the type of stocks you want to find. And if you can make these type of percentage moves, you really change your account size pretty quickly. Let's look at eBay. So eBay is another one where you see here's where the market bottoms here. I got to compare it to the NASDAQ, of course. And we're coming, again, coincident. See, we're just turning into a stage 2 uptrend. All this is all stage 1. you really haven't gotten yourself into a stage 2 uptrend yet. It was back and forth and volatile, and now you've got yourself into a stage 2 uptrend, and you consolidate right coming off of the market low. And because, and a lot of times, and this is something, Dave, maybe you could talk about, particularly in a correction. I know you like to look for those relative strength lines hitting new highs.
Yeah.
Why do we want to look for those relative strength lines hitting new highs when we're in a bear market, Dave?
Well, because those are the stocks that are outperforming the market and outperforming most stocks. And so when you have a relative strength line in an uptrend and the market is going sideways, this is a stock that's resisting the decline. And usually those are going to be the ones that when the weight of the market comes off, they're really going to take off and be the big leaders. So relative strength, the relative strength line is so important to spot, especially in a very tough market.
Right. And MarketSmith has a great little feature where you can just click a button and you choose relative strength line new high, and it will bring up all the stocks that have a relative strength line hitting a new high. This is a great screen to run, or you can toggle that on your current screen when the market's in a correction or in a bear market, because that will have you focus on the stocks that are holding up. Now, keep in mind, a stock doesn't even have to go up. It could go sideways while the market goes down, and it's outperforming. So the market's going down and the stock's going sideways, the relative strength line is going to go up. Even if the stock goes down less than the market goes down, say 30%, stock only goes down 10%. So it's outperformed by 20%. The relative strength line is going to be moving up, and it will pick that up. And when that starts hitting new high ground, that's telling you that you're outperforming, and the stock could then follow suit and maybe hit new high ground. So again, eBay went up 225% in just 23 months from that point. Another thing I want to point out is that notwithstanding the names that go back before I was trading, I started trading in '83, and most of these examples are from my own trading. They're from either the '80s or many of them are the '90s and going forward. But 90%, 95% of all the stocks that we're showing you here, I personally traded. These are not, we didn't go back and say, hey, let's go find the stocks that, corroborate what we're saying. These were traded in real time at the time when I didn't have the benefit of this hindsight. I didn't know it was going to go up 220% in 14 months. So again, this is real life stuff. This isn't just curve fitting and back testing and all that crap. This is real life stuff, and I'm showing you the majority of the examples. Now, there's a lot of examples that stocks that I missed that were perfect setups, and I'm gonna show you those also because I include those in my model book work. And there's also going to be stocks that I screwed up on, and I had to figure out why I messed up on them. They end up maybe turn out to be big winners, and I sold them too soon. Lumber Liquidators is one of those. Is one that I sold too soon. But I was in this stock buying it here. You can see again, you're in a correction, right? And now this stock just has a consolidation, moves into new high ground. Again, this looks coincident, right? It's coming right off the lows. And again, this was one of the first stocks to go into new high ground coming off the lows of this correction. And those are, when we go all the way back to when we started with categories, those are your market leaders. These are your market leaders. They're going to look expensive. They're going to have the high relative strength. They're usually going to have the superior earnings, and they're going to have the high PEs. They're not going to be cheap, and they might be. You might be tough for you to buy. You might think that they're expensive, but just the fact that this is one of the first stocks going to new high ground right off the market lows, that tells you this is a stock that wants higher.
Yeah, and usually the names that are starting to go into new high ground, these are actually new names, and a lot of them you're not going to be familiar with. They're names that are going to lead this next bull market. And it's not going to be the one that you made money on, in prior bull markets. In a lot of cases, there'll be names where you're going to go, what in the world do they do? And you have to get up to speed very, very quickly. When you see a stock going in a new high ground in a tough market, you have to find out what they do and check out their numbers to see if you've got a new market leader on your hands.
Yeah, usually leaders that led in a prior cycle don't lead the next cycle, and the best, their best move is behind them. I know we've had a pretty big secular move in FANG stocks, and that might be an exception, but and we're in a sort of a nifty 50 environment. But again, you're probably going forward from here, you probably won't see the FANG stocks be leaders anymore. It's going to be names that you're going to have to get familiar with that you may not know. At one time, Amazon and even Microsoft and names like Dell Computer and Home Depot, they were not widely known at all. When I was first buying Amazon and Yahoo and all these names that are household names now, very few people had heard of them. Let's move on here. So Humana, this stock went up 1,000% in 38 months from this point, and this is an example of another coincident move. You can see almost right off the low, almost to the day of the low, this stock emerges into new high ground right as the market is bottoming. Now this is in 1978. I wasn't trading back then, so this comes from our model book of stocks, of leading stocks that set up. So we've studied them all the way back. We've got models going all the way back to the 1800s, and nowadays there's a lot of O'Neill's put out model books, and they have IBD and MarketSmith. They have model books that they've done each year with the leading stocks, the biggest winning stocks of each year that you could purchase. So there's so much information now, and so many examples that you could be using. Here's a stock that I bought that really, this is one that I made almost 100% on, but boy, did I sell it too early. It went on to go up 2,500% in 42 months, and I think it went even much higher from there. But this is where you get that leverage that I talked about before, where you buy a stock, and if you get it off the market low, even if you were to get it right off the market low, you see here the Nasdaq went up about 18%. I call it 20%. This stock goes up almost 100% during that time. That's how you get your leverage on the market, by being in the leading stocks. Those are the ones that can make really big moves in a relatively short period of time. Sometimes you get these stocks, they'll go up 50%, 100% in just a number of weeks. So do the math. You start compounding those type of moves. They can really add up over time in a pretty short period of time. The interesting about this stock is that this stock actually went into new high ground the day before the market made the absolute low. So it's almost to the day right off the low.